In today's video, we're going to be focusing on the banana zone, which is the parabolic phase in the cycle for Bitcoin's market cycle. We'll be talking about the different phases that we have in this current cycle, comparing it to historical banana zones and understanding what's going on at the moment, what happened to the banana zone in the first place, and what's potentially laying ahead in the remainder of this cycle. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and let's dive into it. But before we dive into it, a quick message from our sponsor. Our sponsor for today's video is bitfinex, and they are a really great crypto exchange for you to consider for your daily crypto trading and investing. They are a no KYC, no VPN futures exchange, and their liquidity is on par with the top exchanges. Users can trade over 700 trading pairs with up to 125x leverage without restriction. And to celebrate our partnership, we're running a very special offer. From September 2nd until October 2nd, you can sign up using my link and deposit $100 to get a 20% deposit rebate and get up to $2,000 trading bonus when you trade on bitfinex. Deposit reward will be distributed on every working day, and trading rewards will be distributed after the campaign ends. And for more info, check out the link in the description down below. Thank you very much, bitfinex, for sponsoring this episode. Let's dive into it and let's talk about this banana zone. I don't have an updated chart for this banana zone here, but generally speaking, this corrective phase and this corrective phase, those are the two corrective phases that we tend to see in price discovery. So I've been talking about how this is price discovery correction number 1 and price discovery correction number 2. And in the banana zone, generally speaking, we have two of these corrective periods, which means that we have a uptrend number 1, uptrend number 2, and uptrend number 3, which translates into price discovery uptrend number 1, price discovery uptrend number 2, and then number 3. But the thing about what we're seeing in this cycle is, of course, these pullbacks in the post-halving period have been quite large in terms of retracement depth, but also in terms of how long they've lasted. But over time, we've seen this shrink, not just in terms of time, but also in terms of retracement depth. And this has been going on progressively over the course of the cycle. So we've been seeing shallower pullbacks. So here we saw 33%, here we saw 31%, and here we saw 13% at the moment. And so this retracement depth definitely getting shallower, and of course it's taking lesser and lesser time for these pullbacks to take place. And that's just the way it goes as we progress into the final stages of the cycle. But when it comes to uptrends, these uptrends should be roughly equal, or at least showcasing some similarity in terms of the copy pasting overall. But when we're looking at price discovery uptrend number 1, it was a fantastic period taking place over 7 weeks or so before we local top. And then we saw really a fraction of that uptrend in price discovery uptrend number 2, maybe 20% of that uptrend right over here, maybe even a little bit more than that. We really saw a fraction of this upside take place, and really if we measure it from old all-time highs, then this gets even smaller, which is why I mentioned 20% in the beginning or so. So 25% of price discovery uptrend 1 took place in price discovery uptrend number 2. So we saw a diminishing in the return in price discovery uptrend 2 compared to what we saw earlier on in the cycle. Not only that, but if we look at these previous ranges, we'd break out quite nicely without any stalling or pausing, even here. But over here, we actually saw a great cluster of price action develop as part of a post-breakout retest right over here. So before we saw a breakout into price discovery uptrend number 2, we really struggled to develop a post-breakout retest base that would launch us into those new highs. And so we're seeing a fraction, or we actually saw a fraction of that upside take place. And that's also translated into a shallower pullback. Generally speaking, when we look to previous cycles, we tend to see these pullbacks simply get shallower over time, and also they take a little bit less time to resolve themselves. And so if we're looking at, for example, these ranges where we saw clustering in the price action below this reaccumulation range, we saw the same thing happen over here and also over here. Obviously, lesser and lesser downside deviations, and now we're at a moment in time where price is actually trying to reclaim that reaccumulation range in this vein here. So the question is, do we reclaim this over a period of a few weeks, or literally just reclaim it within a week or two to rally across the range and try and challenge for that final breakout into price discovery uptrend number 3? Because if we look at historical cycles here, corrective phase number 1, number 2, we've already seen corrective phase number 2. This is what this current pullback translates into. 13% over a few weeks or so. And historically, whenever we've seen this price discovery correction number 2 take place, we'd see that final uptrend take place overall. So price discovery uptrend number 3 probably being one of the more parabolic moves in the cycle. But from here, we've only seen a very small price discovery uptrend number 2, and at the same time we saw a limited price discovery correction number 2. And so price discovery uptrend number 3, maybe it's not going to be as parabolic as it once was in the cycle, simply because of what we're seeing from the data. Maybe the maturity of the cycle and obviously the diminishing returns that we see, we're not going to see as parabolic an upside over here, but we will probably still see new all-time highs going forward, simply because we still have a bit of time. And also, if you factor in the extended cycles, it's something worth considering overall. So historically speaking, we've seen Bitcoin peak 518 days after the halving in 2017. In 2021, we saw Bitcoin peak 550 days after the halving. So we're already seeing a little bit of an extension here, a natural expansion in the cycle by 30 days, comparing 2017 to 2021. So, you know, if we're going to repeat 2017 history, then we'll be peaking right now as we speak. But if we're repeating 2021 history, then mid-October would be that goalpost. But at the same time, if we're seeing expanded cycles naturally occurring in the halving cycles, and we only have 2 data points really that we can rely on, and there is a 30-day period or delta between these, if we do see 30 extra days take place, then that would get us into mid-November overall. And some people are talking about going into December, which would be 600 days, which is already quite a change compared to the 550 days after the halving. 600 days seems to be pushing it, and 640 days, which would get us roughly to the 31st of December, I think this would be too much of an expansion based on what we've already seen in the past. Could we really expand by 100 days versus what we saw in 2021? Because at the moment we're seeing 30 days potentially naturally occurring, and even if we're expanding by 30 days over here and then 60 days on in this cycle, then that still doesn't get us deep into the December 2025 region. And so even if we are expanding by 30 days or even 60 days, this still seems like quite a lot. But if we're talking about, for example, the 4-year cycle, and of course many people are saying the 4-year cycle is dead and whatnot, and I think it's a little bit premature to say that when we've only just begun this current new 4-year cycle. Each 4-year cycle takes 4 years to develop, and we have periods of underperformance and overperformance, and then mean reversion. So that all takes place over a 4-year period. To be now talking about throwing the 4-year cycle principle, which has guided us quite well over the cycles, to throw that principle out of the window prematurely in the first 9.5 months of the new 4-year cycle, a little bit premature. But in saying that, we have to also understand that this is candle number 1 right over here, and we tend to see diminishing returns in candle 1s, so that's pretty clear. Overall, if we measure these candle 1s, they are diminishing in their returns, and so simply a natural thing in a maturing asset such as Bitcoin right over here. And if we're even talking about diminishing returns, we could still see expansion in this cycle going into as late as 31st of December, which would still mean that we're locked in candle 1. So even then, that expansion can still be by 100 days. I'm not saying we're going to get 100 days of expansion. I think that's a little bit too much, but we could still see 100 days of expansion in this current cycle and still fall into the 4-year cycle and respect it. But of course, if we expand by that much in this current candle one, then obviously later on in this 4-year cycle, maybe in the future one, we could start to see a bit of desynchronization away from the 4-year cycle. We might start going away from it. But at the end of the day, it depends on how much are we going to deviate from it in this 4-year cycle. And that depends on how and when exactly we peak in this bull cycle in these next months. Do we peak on the 31st of December, which would be 640 days after the halving, which is already a tremendous extension, or do we peak just by a natural 30 days more, for example, or maybe we just end up bang on within the 550-day period in mid-October. The window of opportunity is closing. So if mid-October, if we get a repeat of 2021, and if we see acceleration into mid-November, then it gives us this slither of an opportunity. If you want to think about an additional month of expansion, then that gets us into maybe December. But we can see, just based on how little time we have left, this is a really shrinking window of opportunity. Time is running out, and obviously it's very easy to keep moving the goalposts, and that's how you miss out on the bull market peak, and you end up round tripping your investments, which you don't want to be doing. You want to be scaling out at the period when it's slowly time to be cognizant of the limited additional reward that Bitcoin could potentially continue in its upside, versus the risk of a bear market, which would be 60-70%, because at the same time we're also seeing shallower bear markets. If we compare this 77% bear market also, that's obviously a little bit shallower than this deep 84.5% bear market. So we are seeing shallower bear markets, and we're also seeing shallower rallies and diminishing returns. So this parabolic phase of the cycle was quite pronounced in 2017. In 2021, you can see that we are half of that. And here in this cycle, once again, we're half of that. And in fact, if we're going to be half of that, once again, like we just saw in that exercise, we have a little bit of upside potentially to enjoy in price discovery uptrend number 3. But it just showcases how that diminishing upside remains in this cycle. So if we're talking about the banana zone, historically, these banana zones, yes, they do exist, but they do diminish in terms of their returns. And maybe there is still a bit of upside left, but it's not going to be as crazy as most people think, because of how diminishing these phases are. And it's not these upside phases that are diminishing, it's also the downside bear market phases. So maturation in the market cycle simply is occurring here, and so diminished returns over a longer period of time, probably, where we see maybe the cycle extend a little bit more as a result of that. But I don't think it's going to extend as much as people think. I don't think it's going to extend into 2026, because that would destabilize the 4-year cycle. But I just feel like that extension isn't going to be as much as people think. Even if we're extended by 30 days at a time, then that means mid-October, or at least mid-November, 580 days after the halving. If we even just double that period and do that at 60 days, getting us into December, still that would be quite a bit of an expansion by standards of history, and that would still potentially make sense as natural of an expansion that we could potentially see. And that still means we'd be within the 4-year cycle framework. So no need to throw out the 4-year cycle just yet. at least wait for it to be showcasing signs of invalidation, and we're not really seeing any of that. Granted, we are seeing periods in the cycle of clustering, which we've been seeing get quite prolonged. This reaccumulation phase was much longer, for example, than the reaccumulation phase that we saw develop after the halving, which came out from the March 2020 crash. Historically speaking, these reaccumulation phases have been shorter, and now they're getting a little bit longer. And the reaccumulation phases that happen afterwards also getting a little bit longer, which might be extending the cycle a little bit. But these are changes, these expanded ranges are smaller changes, so maybe by 30 days more or so. And so if we're seeing these reaccumulation ranges develop by 30 days plus versus other cycles, then maybe we need to add that 30-day naturally onto a potential bull market peak, which still gets us into mid-October and maybe mid-November if we're thinking about natural extension in the cycle. But curious to hear your thoughts. Comment down below what your thoughts are on the extended cycle. Subscribe to the channel for more videos like this in the future. Thank you so much for watching. Like this video if you enjoy content like this going forward. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.